Hello, my name is Karrington and I'm a 23-year-old enrolled agent. And here are three things I wish business owners knew about taxes. I have the absolute blessing to talk to business owners each and every day, all the time about taxes. And I've started to notice that they constantly make the same three mistakes over and over and over again. And I feel as though it is really the difference between them owing maybe nothing on their tax return and potentially even getting a refund to them owing thousands and thousands of dollars. So, if you're a business owner, you're looking to start a business, you even remotely thought about it, this is definitely the video for you. Topic number one that I absolutely want to discuss is that an LLC is not going to save you an absolute dime on taxes. And I'll say it again, an LLC will not save you on taxes. What exactly is an LLC? An LLC is only just a legal structure. It protects you legally. Does it do anything for you specifically tax-wise? Not so really. If I have an LLC and my business income is $10,000 versus me with not having an LLC and my business income is $10,000, guess what? That tax number on my tax return is going to be the exact same. So, what is an LLC ultimately good for? Like I said, it is a legal structure. It protects you from all liability that comes with your business. But most importantly, an LLC gives you the flexibility to be changed on the tax structure side of things. When you form as a single member, just a normal LLC, you are what is called a sole proprietorship, subject to self-employment tax. And I'll have a video diving completely deep into this topic. But you're considered a sole proprietor. With you having an LLC, you have the ability to make elections to change your tax structure. Your legal structure, again, is still going to remain the LLC, but you have the ability to change your tax structure. And that's where the potential savings are. There's so many times where people who should be potentially an S corporation, should be potentially a partnership tax return, but they're staying as a sole proprietor. They're staying as a single member LLC, and it sometimes hurts them so bad when that tax return comes into play and they're getting hit with all that self-employment tax. So that is definitely going to be number one. An LLC is not going to save you an absolute dime on your taxes, but tax structuring absolutely will. Number two that I wish business owners would understand and absolutely stop making this mistake is understanding that tax deadlines matter, and they matter a whole lot. A lot of you may know about the April 15th tax deadline, right? Everyone says, oh, it's tax day, April 15th. Everyone knows about that deadline. What exactly is it? It's the deadline for you to get in your personal tax return. So typically everyone knows about that deadline, but do you guys know about the 3/15 deadline? Do you guys know about the 9/15 deadline? What about the 10/15? What exactly am I referring to? These other deadlines are if you were to put your tax return on extension, you're granted an additional 6 months to file your tax return. That's what the 10/15 deadline is. For the 9/15 and the 3/15 deadline, those are for business tax returns that have a flow-through structure. Typically, that's going to be your 1065 return and your S corporation tax return because a K1 tax form needs to be issued and is required for you to go ahead and file your personal tax return. So what the IRS says is, hey, you need to file those business tax returns first, ideally a month earlier, for those forms to be issued and then you to add those forms to your personal return. And your personal return will be due April 15th unless you put it on extension. Now, the biggest key here, when you're putting your tax return on an extension, I will repeat this over and over and over again until you guys are absolutely tired of hearing it. When you put your tax return on an extension, come April 15th, it is not an extension of time to pay. It is an extension on time to file. What does that mean? If you're filing your tax return and you decide to put it on extension, but you ultimately are still going to owe on that tax return, because that payment is due April 15th, you will now be charged interest. If you end up filing after the 10/15 deadline, even though you put your tax return on extension, you will be hit with a late filing penalty. If you file after 4/15 without putting your tax return on extension, you also will be hit with a late filing penalty. So, a very important piece to understand is that all payments are due on April 15th, and you might be asking, so how do I know how much I owe if my tax return isn't done yet? And the IRS is saying I need to make a payment on April 15th. That's when you go to your tax preparer and say, hey, can you estimate, give or take, what I'm going to be owing on this tax return? Or can you let me know that I'm potentially going to be getting a refund? So when April 15th rolls around and you're putting your tax return on extension, you know if you need to submit a payment or not. That's going to help you not incur any interest, not incur any penalties or anything like that. That's extremely, extremely important because I've seen it so many times where we're looking to file these tax returns for this business owners, any person who's putting their tax return on extension, and typically 9 times out of 10, they're owing interest, they're owing penalties because why? They didn't necessarily make a payment on April 15th. So April 15th, definitely the most important tax deadline, but you need to understand all the other deadlines that are associated with that specific tax return and that tax filing year. So that's definitely going to be number two. And number three, and I definitely think this might be the most important, understanding that tax planning starts before the year is actually over. What do I mean? What exactly is tax planning? By the time we're looking to file your tax return come April 15th, the time for tax planning is done. You're just hoping that that tax return shows potentially a refund, that you don't have a balance due, or maybe if you're owing, you're not owing too much, right? I kind of see that as being reactive. We're hoping and praying that the tax return is going to show something that's favorable to us. Why not plan and be proactive on the different things that we can do on that tax return during the year so we know when April 15th rolls around and we're filing the tax return for that previous year, let's just say April 15th for 2025, we're filing the return for 2024's tax year, we already know what to expect. That's when tax planning is the most beautiful. Tax planning allows us to understand this is where the business income ultimately is at. These are the additional expenses that I need to potentially add to my business or the different investments that I need to get into before year end. So when 4/15 or April 15th rolls around and it's time for me to actually file that tax return, I'm not surprised when I have a potential refund. I'm not surprised when I have a small balance due because I did all the planning and I knew exactly where I was going to be at for that year. Tax planning and advisory is the most important piece for taxes if you want to take it to the next level and make sure that you're not overpaying on your taxes and most importantly utilizing a tax code that allows you to create all these deductions and kind of utilize the same things that the rich are ultimately utilizing. So that is the most important piece. Tax planning, so important. So if you're a business owner, please take these three things to heart. Understand the ins and outs of, again, just to reiterate, an LLC, not going to save you any money. Number two, deadlines absolutely matter. Understand when the 10/15 deadline is, the 9/15, the 4/15, the 3/15 deadlines are. And most importantly, understand that tax planning can help you understand what that bottom line number ultimately will be before the year even ends. If you guys are looking forward to learning more about tax planning, learning more about the deadlines, and even understanding the tax structuring in the LLCs, drop a like, subscribe. I look forward to explaining those complex topics and making them as simple and digestible as possible for you guys to take and run with and actually apply it to your guys' tax return. Look forward to it. Bye, guys.